Today we're going to be looking at an article from Forbes, and it says, here's why Tesla stock just surged past a record $900 per share. If you have been keeping up with the news recently, you would know that the Tesla stock has completely skyrocketed over the past couple of days or so to over $900. So it says here in the article, Tesla continues to skyrocket, surging to a record new intraday high of $961 per share on Tuesday, thanks to a fourth quarter earnings report last week that topped expectation, and the Wall Street analysts predict further upside for the company. Now, on Monday, it hit $780 per share, and on Tuesday, it went above the $960 per share before dropping back within the last hour or so to around $887. And the Argus Research raised their price expectation of Tesla from about $500 or so to $800, which is one of the highest on Wall Street. And that is also when Tesla gained 19.9% within one day. Another investment firm, ARK Invest, updated its evaluation model, and they believe that Tesla could be worth up to $7,000. So this is the article. It says that Tesla should be valued somewhere between $700 and $4,000 within 5 years' time. And to me, that's just absolutely insane. Like 5 years' time is just crazy. Alright, so further information. Tesla handily beat its earnings last week, recording its second consecutive quarter of profitability and promising investors that it should continue to be profitable going forward. And they impressed Wall Street with the rising deliveries and a new China factory, which came online quicker than expected. And they expect to exceed 500,000 units being produced, up from around 367,000 last year. So the Tesla stock has steadily been rising over the last 6 months, when it hit a low of around $178 in June 2019. And all the way to $960 in early February. So the stock has gained nearly 170% over the last 6 months alone. Despite the production delays, parts shortages, labor costs, and other difficulties, ARG Research expect Tesla to improve from its dominant position in the electric vehicle industry. Now, there are many investors that were betting against the Tesla stock, hoping for its price to drop. And there are the what we call the short sellers. So Tesla is one of the most shorted stocks on the US stock market. It says here that 18% of its publicly available shares are sold on short. So for short sellers, they would borrow shares from the bank, and if the stock price goes down, they can buy back the share again to gain a profit. Now, the main problem with that is doing that has very high inherent risk, because if the stock price does not go down and keeps on going up, your losses is almost infinite. So what happened here is, because the Tesla stock price has been increasing consistently pretty much throughout the start of the year, a lot of short sellers decide to take the losses and buy back the shares at a higher price. So when many short sellers do that at the same time, it can create a really high demand on the share itself and almost artificially drive up the price. And this is known as a short squeeze. Now, it says here in this other articles, Tesla short sellers are down 8 billion in 2020 already, including 2.5 billion alone from Monday's pop. CEO Elon Musk is the company's biggest shareholder, and Monday's share price gain pushes net worth to 39.3 billion. And this is the famous Elon Musk that famously suggested in public that he considered taking the company private at $420 per share. Tesla struggled through the first half of 2019 amid doubts over consumer demand and whether or not the company could achieve profitability. So Tesla itself has not actually made a profit over any calendar year. It has only produced a profit over the last two earnings report, which means that inherently investing in Tesla is still fairly risky, and you are basically taking a stab at investing something that could potentially be profitable in the future. In this other article, it says that sales emerged stronger than many have expected, and production problems were vanquished. And while Tesla lost $862 million in 2019, it turned a profit during the last 2 quarters of a year, including $105 million in quarterly earnings in the last earnings report. Tesla said that it expects to exceed the production of 500,000 vehicles this year at its factories in Fremont, California, and Shanghai, and have worked out the kinks of making the Model 3 small car and the Model Y, a small SUV. And of course, who can ever forget the review of the Cybertruck? And I have to be fair that if I ever wanted a pickup truck, which I probably don't under any normal circumstance, I would probably want to get a Cybertruck. Just because, I mean, when you look at the thing, like, you could get a supercar for like 3 to 5 times the price of that for like $500,000, or you could get a Cybertruck and you'll still get the same amount of looks on the streets. So why not get a Cybertruck, eh? So the analyst at ARK Invest, one of the firms most bullish on Tesla, said investors have figured out that Tesla is ahead of competitors in things such as battery technology and software. And the demand for electric vehicles over the next 5 years is probably underestimated. However, I had a quick look on the article talking about ARK Invest. It says near the bottom of the article here that there are 2 ARK Invest funds that have a very high percentage of Tesla shares, which includes the Autonomous Technology and Robotics ETF and the Next Generation Internet ETF. So, I mean, of course they're gonna sing Tesla's praises because they're trying to basically get people to invest in their ETFs. So there is absolutely no reason why they won't say that Tesla shares is just going to skyrocket. The run-up in price is, like all stock investment, a bet on the future. And currently, electric vehicles only account for 2% of the global vehicle sales. And Tesla is up against more well-established competitors. And it says here that stock rise seems irrational to certain analysts, who points out that Tesla is an auto company facing perpetual large capital expenditures on factory, vehicle development, and raw materials. And the giant increase in stock really doesn't make sense in a lot of ways. So apart from the fact that there are short sellers that are trying to avoid increase in losses, there's also quite a large amount of people that have the fear of missing out on the latest hot stock. So back in the day, there is Amazon and Netflix, and who's to say that Tesla won't be like this in the future? But all of this still remains to be seen. Let me know what you think about the future of Tesla stock and its potentials. Would it keep growing, or is it just a bubble waiting to come crashing down? If you are interested in investing in US stock, the easiest way to do it from here in New Zealand would be using Hatch Invest. Check out my video on Hatch Invest if you would like more information on that. And you can also sign up on their website. And I will see you in the next video.